All right, guys, welcome back to the channel. And today we're going to cover the stock charts, going to figure out where things are heading from here. Yesterday I said that I think there's more downside. I think we're going to get a big sell-off or some sort of a sell-off. And so far we nailed that one perfectly. So far so good in the QQQ short. That thing gapped down at 800 points, and so I took a little bit of profit at the open. I've since recycled back into my short because I see something firming up I want to point out. So before I continue, give me a thumbs up. Appreciate the interaction, and I'll continue to put out the content. So, all right, look, here's what we're looking at here. We've got the triple Qs, and what I see here is it's flagging out. Let me move this line here for a second. I'll put it back here. All right, so this is this is a bear flag. It can break to either way, but the probability says that it's going to break to the downside, and you're going to get a continuation, because that's what this is a continuation pattern. And so what do? Well, we measure the flagpole, and that's what I got right here. So I measured this flagpole. Here's the top of the flagpole, and even the gap, you include that, and then you go all the way down to the bottom of the flag, and then take that and then measure that from the breakout point, which maybe it's here. I don't know if we're going to break out today, break down today. It's probable that we do, but again, we might not, and we might just continue this flag. But if we do break down, then here's your measured target. Look at that. It sits about 194.88, so a slight undercut of a major support level. Here's your support level right here, 195. I've got it at 195.50 roughly, but that comes back to kind of this peak here. You could adjust this slightly. Maybe it's right here, 195.10. Regardless, 195.50 down to 195, maybe even a little bit lower, somewhere right in there. You could even move it right down there to 194. Yeah, 195. We'll just call it 195. Regardless of whether it hits it perfectly or not, it's really it doesn't matter. We'll be within pennies if this gets there, and that's kind of the target. So that's your major support. That looks good. I mean, this plays into this plays into everything that I'm seeing. And what would this do? Let me move this again. So let's just mark this out now as our target, this 195, just so everybody knows. 195 target. All right, right there. What does that do? All right, well, that undercuts the recent lows right here. If I zoom in, here's your recent lows right there. That's going to undercut it, giving everybody the oh shit panic time mode mentality, because we always think about the mentality of the traders. And when anybody who's long, this was their relief rally that they thought, oh great, the pain's over from this big gap. We got a lot of traders trapped up here. Now that we're moving south, anybody who was in this relief rally thinking that they were going to get their money back, they start to panic. That panic creates the next leg down. And that next leg down, would undercut the lows. At that point, nobody thinks the bottom's ever going to, it's never going to stop selling off, because we're at new lows kind of in the short term, and the panic really starts. And that panic's usually the end of the move, because everybody flushes out, all the sellers panic and sell, and then people swoop in and buy. So what does that do? Well, that puts us down to, undercut the lows, creating that panic selling. We also would undercut the bull market support line in triple Qs. Here's the weekly chart. Red line right here moving up. So, that would basically undercut that. And that sets us up for the bear market, basically. What do? We undercut it. We could undercut this a lot more too, but we undercut it. We start to firm up, hold some support, come back, do a back test, and now we start trading in a bear market from below the bull market support, just like we have in the SPY. The SPY is trading below support. The Qs looks like it's primed to do that. So I think that's what's going to happen. I think we're going to undercut this, and then we're going to come back and do a back test, and then we're going to continue to move south. And that's kind of the longer term, medium term, whatever you want to call it. But in the short term, I think we undercut and that's going to be our target for now. And then we'll probably look at a back test, and then we'll just have to evaluate the markets at that point. This one, fun. This is the only one I'm kind of eyeballing right here for a long, if we get that flush out move, and I'm looking down around 35 bucks. I pointed that out in the video yesterday. I went into detail about this one. So FUN, if you're interested, watch yesterday's video, and I'll go into more detail in that video on that. But that one I'm interested in. That one looks good for a long if we can get it down there. And SPY, let's look at SPY. Somebody pointed out that, the SPY breakdown is not, my trend line is not good in the SPY. So we want to look at that. Let's look at the hourly. And they were right. Ultimately, if you look, yesterday, we closed right around here, which was, basically at support. But the thing is that I want to point out is Qs moves the market. SPY is not moving the market. SPY includes the defensives. Qs is going to move the market to the upside and the downside. Q is your Q is your throttle. That's going to, push the market up or push the market down. And because the Qs broke down, you're not going to have the SPY holding up when the Qs broke down. So yes, it's good to see both charts break down, but, I trade the Qs because that's usually the front runner. And so I look for the breakdowns there. And that's exactly what we got today, gap down. So at this point, this is broken down. This is a flag. It's flagging out. So we can measure this one too. There's your flag. It's not perfect. Let's just say that's the bottom of the flag there. And then you've got your flagpole. The flagpole could be all the way up here, but I'm going to just be conservative and say it's right here. All right, and then we'll move this depending on when we break out, but somewhere right in here. And that puts us, clearly undercut the lows there. And, right there. So we undercut the lows, and then we'll see what happens. Maybe we get a kickback rally all the way back up to this 302. I could see that happening. You've got, there's some major resistance right there. The point is, it's sell the rip market time. It's not buy the dip. It's sell the rip. So the point that you need to understand is you will have kickback rallies. You will have rallies. It'll feel like the selling's over, but that's just because you're not anticipating what's going to happen next. You're just kind of in the moment. You feel good. Things are going your way or you're getting your money back, I guess, if you're long. I'm not sure how many of my followers actually are long, but I'm sure people have 401k money and things like that. I don't do 401ks personally. I never have. I think they're not a good mechanism. However, there's your major target, and then maybe we have a kickback rally. The point is sell the rip, and we're below the trend, the bull market trend. So this thing, even though it kicks back or will have kickback rallies, you're below trend. You're starting to move south. Kickback rally is just to be sold into. And, if we're down here, it's a kickback rally. We're going to keep moving lower, most likely. And, we've got some kind of longer term targets down here. We don't need to cover those for now. But and let's look at, the other thing is gold sold off a little bit today. Let's look at that. Okay, here's gold, and I did take a moment to check my trading platform, Lightspeed. Still, short still working out, so it's I think we're still good. But look at the dollar. This is just boom, plunging. So, this tells me, this should continue. This should continue south. And the reason why is we had the kick, we kind of broke the trend right here that I had. It wasn't the cleanest trend. We had a couple breaks of it, but we broke it right here. Here's your breakdown. Not super impulsive. And then we had the kickback rally, overshot it, but that was a false breakout, and boom, head lower. So gold continues to head higher. Dollar continues to head lower. Stocks continue to head lower. That's exactly what we've been calling for. So we continue in that pattern for now. Until that changes, we'll continue, trading that way. I think the dollar's going to head down here, and then it'll probably find some support and bounce around a little bit, pop up a little bit. But I think ultimately it's probably going to break down just because the Fed continues to kind of shed its bullets. The Fed continues to use its bullets, cutting rates. They're probably going to cut some more, and probably here in the next week and a half they'll cut, and then we'll probably be down here on the dollar. That might be the near-term bottom for the dollars and the near-term top for gold. Let's look at gold bullion. Where would that put us? Well, you know, you got gold bullion here. Let's see, what's this uptrend line that I have here? Yeah, I mean, there's a price channel. It's not, you know, well established yet, but we've got this kind of price channel here, this up channel. So maybe the near-term top is right up here around the 1700. And I could see that playing out. The point is, even if we get to 1700 and that's a near-term top, gold is still in a bull market. You've got 1570, 1566 as support. So this, if it wants to sell off, you know, after hitting that near-term top, eventually we're getting up here, most likely. Probability says 1900 and higher. Here's Barrick. Had a pretty good rip this morning. Fell down right to support. Here's your support. Undercut it a little bit, but 2078 roughly. You can see we had a lot of reactions around that level. And, you know, we stopped right there, moved higher. Here's a gap right up to it, a little gap right there. That looks good as a kind of a near-term support. We undercut it today and are starting to move higher. So this should continue to make its way up along with the major target, continuing to be up around this 2340 range. So that looks good. That's really it, guys. That's all I want to cover. Give me a thumbs up. Hit subscribe if you're new. You know, if you've been following me, you've been making some money on some of these trades. So I know I have. So good luck, guys. Give me a thumbs up, subscribe, leave a comment. And someone left a comment yesterday about some charts they wanted me to cover. I'll look at those here over the weekend and see what I can put together. I don't have time to do it today, but I can take a look and see if there's anything going on with those. And then someone also asked me what I thought about the Euro Pacific Gold Fund. That's Peter Schiff's gold fund. I think it's fine. I mean, any gold proxy, especially if it's got the larger miners, I think the larger miners are going to tail the gold price, gold bullion price, and gold is clearly in a bull market. So, you know, if you're grabbing those large miners, you should should be relatively safe and you know, kind of follow along with the bull market in gold. The juniors can be the Wild West, so you kind of have to know your fundamentals a little bit on those juniors. They're more speculative. So, I mean, personally, I do own, you know, one junior, and it's a speculative position, and I don't put nearly the size of position on that I would with something like Barrick, and that's this SGSVF. Today we hit support right here, so I tried to, maybe I added a little bit, might have got filled. I tried to get it at 107, so maybe it got filled, but just a small amount, and I'm going to, you know, just small positions in juniors for me. That's how I play it. I prefer to have larger positions in kind of the larger miners like Barrick, Newmont, things like that. AEM is you know, relatively okay for a larger position. But yeah. All right, guys. Thanks. Catch you on the next one.